So today we had some horrible news come out that's honestly pretty bearish for Tesla stock, and we absolutely have to talk about it as well as address the elephant in the room that no one wants to go ahead and talk about, which is of course the fundamentals for Tesla. And of course we'll go ahead and touch on that later on in this video, but I want to start off this video by just making it very clear, right? I do have exposure to Tesla stock in my long-term portfolio. I'm long-term bullish on Tesla. I've stated that, and I know a lot of people see my videos and they think I'm bearish. I've just been saying, look, now is not the time that I personally am buying shares of Tesla. I've been saying that in every single video, that I'm waiting for specific price levels to hit, and we haven't seen those price levels. Thus, I haven't been buying any more shares of Tesla. I'm not bullish at the moment just yet. And also, as far as trading Tesla, because I also have a separate trading account that's, just completely different from my long-term investing account, because again, trading and investing are two separate vehicles. And in my trading account, I haven't really been doing anything with Tesla, as it's really not the name that has been honestly providing a lot of opportunities. There's been a lot of opportunities in other areas that we'll go ahead and touch on, but I want to start off with the bad news. So today we had the update that Jeff Bezos of Amazon and also Nvidia are reportedly joining others in backing up a startup building a humanoid robot. And in fact, if you parse through this article, it says that Bezos and Nvidia are said to be among the backers in a large funding round, and how it's also, following the footsteps of other companies such as Microsoft, OpenAI. You also had Intel that is funding this company as well, along with Samsung and LG. So a lot of names are backing up this new startup company. Now, the reason why this is negative news for Tesla is because a lot of the Tesla Uber bulls for a while have been sharing their opinions, stating that one of the reasons why you can justify the price that Tesla's at right now is because the idea that the humanoid robots as well as FSD for Tesla is going to significantly improve the profit margins for Tesla, and as Elon Musk has said in previous earnings calls, it's going to make it the most valuable company in the world. And so that's the statement that you often hear from a lot of the Tesla Uber bulls. However, the reality is we haven't had any significant updates with the Tesla humanoid robots. In fact, in one of the earnings calls, I think Elon Musk mentioned that they only produced around 6, and it's quite difficult to source the parts for them. And we're beyond far from this actually becoming a reality of them actually making a successful product with these humanoid robots. Now, am I denying that Tesla's going to be able to do it? No, I'm not saying that. It's just right now things are not looking overly optimistic, as a lot of the Tesla Uber bulls try to make it seem. And then at the same time, now you have pretty much all the competitors joining up together, like, I don't know if they're like Transformers joining into one mega robot to go ahead and defeat Tesla in this new startup trying to make humanoid robots. And so that's honestly a big concern, because and again, one of the things I've always said is, well, you can't really put justify the price for Tesla with the humanoid robots if it's not even out there or not even close to it becoming a thing. But that's something they've been saying. The Uber bulls have been saying that, but now you have, again, all the competitors joining forces, joining together to kind of tackle on Tesla and the race for making a successful humanoid robot product. And so that's absolutely bad news for Tesla. But along with that, we also had this article stating that despite its fall from grace, Tesla remains a bubble stock. And it goes on to say that Tesla stock continues to trade at a bubble valuation despite a decline in its share price by over 50% from its peak. Now, one of the things I've often shared on this channel a copious amount of times in the past is the idea that you don't want to rely on just one data set and silo. You don't want to just look at Tesla stock and only look at the charts and do technical analysis and think that that's enough analysis to come up with a good idea for where Tesla should be at. I always say you want to pretty much synthesize multiple data sets. You want to look at the macroeconomic environment. You want to look at fiscal policy, monetary policy. You want to look at the fundamentals. You want to look at the technicals, look at alternative data. I mean, you want to use everything all together to go ahead and form an idea. And one of the things I've shared in the past is that, hey, look, when you do because there's several different types of fundamental analysis that you could do, but when you do specifically dollar or discounted cash flow models on Tesla, it's honestly extremely overvalued. Now, again, one of the things I do want to clarify is that, again, with these discounted cash flow models, it's not going to 100% be accurate. There's no sort of analysis that's going to tell you, hey, look, this is exactly what the price should be, because every analysis that you do, regardless if it's technical analysis, fundamental analysis, or alternative data, it just gives you an idea if it's overvalued or if it's undervalued. And so one of the things that I've shared in the past is that from a fundamental perspective, Tesla stock is absolutely overvalued. In fact, based on my assumptions in my model, Tesla stock's fundamental discounted cash flow value is around $90 per share. But of course, one of the things that everyone who builds financial models knows is that these numbers can change depending on the assumptions that you put into these models. Now, when we look at simply Wall Street in their model, it's not too far off, as they believe that the fair value for Tesla should be around $100, and we clearly see that Tesla is trading at around $191, making it 90% overvalued currently based on that assumption. Now, I know oftentimes when I talk negatively about Tesla, I lose a lot of subscribers because a lot of individuals, they're looking for confirmation bias, which is why a lot of the channels that always trying to spin, Tesla as a stock that's gonna go to the moon and you should keep buying more and more and more, those channels tend to get more views because, again, people who have money in Tesla, they're looking for that confirmation of bias. But I've always shared the fact that, look, I want to keep it as authentic and real with you guys. And, based on these, fundamental models, it's pretty overvalued. Does that mean that Tesla stock ever has to go down? No, because at the end of the day, stocks don't have to adhere to any financial model you do. They don't have to adhere to any squiggly line that you draw on the chart. At the end of the day, stocks go either up or down based on the capital that's getting poured into them or getting poured out, right? That's the idea of the inefficient market hypothesis. Now, I want to also share something that I talked about recently, and that is this video right over here, with the title being Nvidia stock just saved Tesla stock. Now, I'm not saying anyone has to watch that video, but pretty much the premise of that video was that, hey, look, Nvidia stock, they beat their earnings by a tremendous amount. It was very good, and that pretty much made the overall markets go upwards. We saw pretty much the S&P 500 break into new highs. We saw the QQQ get close to new all-time highs, and so we saw the overall market pick upwards, and that also helped Tesla as well. In fact, if you take a look at this chart right over here, you see that Tesla stock did in fact push upwards, but it was very short-lived. And so far, Tesla still hasn't hit the areas that I've been looking for it to touch for me to go ahead and add more shares into my long-term portfolio. And so I've just been patiently sitting on my hands and also adding capital into other stocks that have been much more profitable and just preserve better opportunities. But as far as trading Tesla, again, I haven't been even trading Tesla on my short-term trading account either, because there's been a plethora of other opportunities. For example, Nvidia being one of them. In fact, just 2 days ago, I shared within the Push and Profit private group on how I like Nvidia where it was at under $700, and I like it for a swing trade going up to $735. And when we take a look at Nvidia, pretty much the day after, it blew it out of the water, going absolutely insanely upwards. And so for those within the Push and Profit private group, we killed it on that swing trade idea for Nvidia, but this wasn't honestly the first time that we killed it for Nvidia in 2024. In fact, I want to highlight this right over here. We're back in December 22 of 2023, or December 22nd of 2023. I made a private video. I'm not going to play the entire private video, but I shared how Nvidia was looking prime to break out based on fundamental reasons, technical reasons, and I also shared how on December 22nd we had Nancy Pelosi trade options, right? She bought call options for Nvidia that were worth $5 million with a strike price of 120 and an expiration date going into December of 2024. And I said that this aligns with our trade idea for the upside of Nvidia. And then I joked around saying she's one of the greatest traders ever, and how this is honestly kind of just something that adds more into our idea of being bullish on Nvidia. And if we take a look at the chart, that swing trade was mentioned over here, and we saw that Nvidia pretty much has done close to 65% since I first shared that trade for those within the Push and Profit private group. And so again, the reason why I haven't been trading Tesla on my trading account is because there's opportunities out there that far surpass the trade opportunities for Tesla. And in fact, Nvidia is just one of the, pretty much one of them. I share a bunch of trade ideas for those within the Push and Profit private group that have been pretty great ideas. And so if you're interested in joining the Push and Profit private group, this way you guys get access to my daily briefings, which are private videos where every single day of markets are open. I talk about what stocks I'm looking to trade and buy, and also just kind of give a brief synopsis and an opinion of what's currently happening or what's previously happened, and also what I think is going to take place based on economic events. Then make sure to check out the first link in the description below, because it's going to be a link to join the Push and Profit private group for just $14 for the first month. That coupon does expire in just 3 days, so again, make sure to check out that link in the description below. But moving on, I want to go ahead and touch on something else, and that is the fact that from an alternative data perspective, we see that recently Jim Cramer has been bullish on Tesla back in November and back in December. And one of the jokes on the overall market is that you want to do the opposite of what Jim Cramer does or whatever he says on CNBC, because you often see you see these market pundits like Jim Cramer go on TV and he'll say one thing and then the stock will do the complete opposite. And I just want to point out that recently he's been very bullish on Tesla, and if you're kind of moving along with that joke of inverse Cramer, do the opposite of what he says, well, look, pretty much Tesla has been moving down ever since he's been bullish on Tesla. But along with that, recently we also had another member of Congress sell a few shares on Tesla just a couple of weeks ago as well. And so that's just another piece of alternative data that I've highlighted in the previous video. But with that all said, I want to go ahead and hop into my laptop, and this way just take a look at Tesla from a technical perspective, as well as just kind of cover the areas that, once again, I am looking to buy if Tesla does in fact touch these areas. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla, and there's quite a few things I want to go ahead and cover, especially as next week we have something coming out that's going to have a significant weighting on the direction for Tesla that I think you're going to want to stick around and kind of hear more about. And so one of the things I also want to say, or actually before I get started, right, just a friendly reminder that if you haven't done so already, consider tapping that subscribe button, as it does help out with the channel, especially when I do videos like this where most likely it's not going to bode well for the channel. A lot of individuals are most likely going to unsubscribe because that's just the nature of what happens when I talk negatively about Tesla. In fact, back in December 28th, I don't delete my videos, by the way. You could go ahead and watch my previous videos. I said, look, this was an area that you wanted to be cautious on in regards to Tesla, because fundamentally things were not looking good. Technically things were not looking good. And I lost a lot of subscribers as I kept making videos of Tesla stock going down. I mean, it was video after video, and I was like, look, guys, Tesla's going to fall down because of this. And, I was just kind of stating what I was actually seeing, what data I was observing. But of course, that definitely causes a lot of individuals to get frustrated. And I understand, right? Because if you're having your money tied into a company and you see someone online kind of saying things that sound bad, well, I wouldn't want to listen to that guy either, right? You want to have that confirmation bias. I mean, me, I like, logical things. But anyways, just do a friendly, thing for the channel. Subscribe if you haven't done so already. But let's go ahead and talk about a couple things. So, again, as I said earlier in the beginning of the video, I am bullish on Tesla. I just haven't pulled the trigger. I said there was 2 cases where I will add more shares into my long-term portfolio. The bear case was, hey, if Tesla falls down below this shelf of volume relative to price, well, that means that there's going to be an accelerated pace at which it falls down, because there's little volume relative to price, and that means that if there's selling pressure, it could fall down quickly. And the area I kept pointing out to was around that $145 area. I said, hey, look, if Tesla gets to that area, I'll pull the trigger most likely. Of course, after waiting for confirmation, and I'll add more shares into the long-term portfolio, as that's more close to Tesla's, fundamental, numbers, right? It's more close or more in line with what the discounted cash flow models look like. And so that's also something I was looking into, and it would fill that gap. And so that was the bear case, right? We haven't hit that. And then the bull case was like, hey, if we hit $204, then I'll consider this falling down selling pressure as kind of a bounce. But I want to see that $204 area. We have yet to see that $204 area. Now, to clarify, yes, at one point we hit $205, but that was in the after hours. And I don't really take whatever happens in the after hours with too much salt, as there's limited volume. I like to really pay attention in the active trading hours. And so we
really haven't hit that $204 area that I've been looking for. And in that recent video that I also highlighted, I shared how Nvidia doing well was going to help Tesla push upwards. In fact, we did see Tesla push upwards, right? Let's go to Nvidia, right? We could clearly see when it's had its earnings, it pushed upwards, and guess what that did, right? It pushed Nvidia into new all-time highs, but it also pushed the S&P 500 recently into new all-time highs. It even got the Nasdaq Index ETF, QQQ, into new all-time highs. Right? Nvidia has been a big driver for the markets, and so we did indeed see Nvidia, its performance pretty much put a lot of optimism to the markets. But literally, Tesla went up and then pretty much consolidated and now is falling downwards. And I guess, again, you can't, pinpoint exactly what it is, but we have had some negative catalyst news for Tesla to cause it to go down. And so I'm still on walks, right? I haven't pulled the trigger. Everyone was saying, 180 was the bottom. That actually wasn't true. We actually saw Tesla hit 175. And so we could very well still see Tesla fall down to that 145 area. Again, is it guaranteed to happen? No. And I want everyone to understand the market from a more dynamic approach. Oftentimes you hear people say, it's going to do this, it's going to do this because of that. No, right? It's really based on capital flowing in and capital flowing out. And until we have that capital come in, and there's nothing suggesting or pretty much hinting at that coming in yet, well, Tesla, is more likely to fall down. Now, if we have some good news, then we'll talk about that later on in this video. Well, that could help us push upwards. But I want us to get a better understanding, right? I think far too many individuals, they look at the squiggly lines and they think that's like the best type of analysis, and that's honestly not true. You want to synthesize multiple things. Now, what is it that I'm looking for that could possibly help Tesla push upwards and get it to that $204 area, right? Well, that piece of data that we're looking into is, of course, Thursday we had the PCE numbers come out. Now, that's the Personal Consumption Expenditure Report, and this is the inflationary gauge that the Federal Reserve actually prefers. And one of the things I've highlighted within the Push and Profit Private Group is recently we had the CPI report come out, which is the Consumer Price Index. That's an inflationary gauge. We also had the PPI report come out, and although they came out hotter than expected, it was honestly a dip buying opportunity. In fact, I want to go ahead and highlight that. So when those reports came out, I shared how honestly they were hotter than expected. The market didn't like that, but it was honestly hotter than expected because of lagging data. And when you looked at more higher frequently data, such as rents and rent equivalents from Zillow and of course other data sources, it was honestly suggesting that inflation was still coming down. And I said, look, the view is still upwards. Market structure is still pointing towards upward momentum. And those within the Push and Profit Private Group, we were able to take advantage of that trade idea. Everyone was scared the market was going to collapse. If you would have went on X.com, everyone was saying, a hot CPI means the market's going to retrace back and stop, going on this upward momentum. No, that wasn't the case. In fact, we even had Secretary Yellen provide a little bit of a stimulus impact with her comments or her commentary on the CPI report, kind of aligning with what I said, saying that it was lagging data, and in fact, we are seeing inflation still trend downwards. And so, that being said, being that we had the PCE report coming out, if we do see inflation come down more or continuously show that pattern of coming down, and again, PCE is weighted differently. It weighs rents and rent equivalents differently from the CPI report, and so if we do indeed see inflation continue to trend downwards. Excuse me for twisting up my words, but if it continues to trend downwards, that's going to be overall bullish for the markets, and that's going to be great news for the broad markets, but as well as Tesla, right? Because Tesla is a high beta stock, and it tends to follow the market, although it's not going to be 100% accurate, as oftentimes you will see it deviate. In fact, it's been deviating quite a bit from the other stocks in the Magnificent Seven, and so that's something we want to talk about. Now, real quickly, another trade idea I shared within the Push and Profit Private Group was TLT, which is, we'll go ahead and pull that up right here. That's actually the 20-year Treasury bond ETF, and we saw that spike up. This was actually something I literally shared in the private video for those within the Push and Profit private group. And again, the idea is just pretty much that financial conditions are more likely to ease. We did see the 10-year Treasury yield kind of start pulling downwards. And so again, you want to look at multiple different data sets. So you don't want to just look at the squiggly lines. You want to look at what the 10-year Treasury yields are doing, because again, a lot of lending is tied to that. And so everything in the overall market is interconnected, right? If you think that, a stock is just going to go up because of again, a squiggly line on a chart, you're mistaken, right? You want to go ahead and piece everything together. But I don't want to make this video any much more longer than it needs to be. If you guys found any value in this video, again, make sure to subscribe and also check out the links in the description below, because one of the links is going to be a link to join the Push and Profit private group for just $14 for the first month. But before you guys go, also make sure to check out this next video right over here, and I'll see you guys on that next video. Take care, guys.